let's also connect with Rohit Srivastava, who is joining us on the show right now. Hi Rohit, good to be speaking with you. This particular series hasn't been that great for all the bulls out there. We have been testing lower lows for ourselves. But what are the cues for the next expiry and what kind of a rollover data you are reading into?
Some reduction in the total futures open interest when we actually look at the final data. And that would give us a sign that some level of capitulation actually ended up happening because even at the end of last month, there was some reduction, but it didn't really take the positioning down to new lows. In fact, all the position got added back. And possibly that is one of the reasons why we still see pressure in this month. So it'll be interesting to watch if that changes. Also, need to watch the net FII futures index positioning also, where they've been holding the highest short position on record. And does that really see a significant reduction? Because then that would signal a change in stance from the institutional player. But so far that is the setup. So going to be very interesting to watch how that these changes happen, because net over the month, you know that we made a low of around 22,786 in January, and we are barely 200 points below that because we bounced into the budget and then sold off. And so the fall actually is not that magnanimous on a month-on-month basis, but the fall after the bounce for so many days, almost now this is the third week going, makes it very, very painful, especially since mid and small caps sold off a lot. So a lot of the positioning also might be in the futures, stock futures. And that too, if it does reduce, we would get a significant idea that there's been some unwind.
Point taken. Let's keep aside the FIIs for a bit. Let's talk about the retail investor now. At what point do you think a sense of boredom kicks in amid a market like this? Because we've been seeing either flattish moves or cuts over the last so many sessions. At what point does this correction stop? Is this a price correction? Is it a time correction? Is it a confluence of both? And at what time does boredom buying begin in the market where we can start seeing some upswing from here?
Yeah, no, surely boredom is already widespread because many days we just spend in the same range. Then there's one day's move up or down, mostly down this time. And then again, you spend 7-8 days in the same range. That is what has happened through most of February. Even the last 3 days, we are just struggling around this 22,500 region. I am hoping it will end with the expiration. That is why I mentioned that I'm looking at a lot of the open interest that was carried forward to somewhat get reduced, and that will then help in it building back on the way up. So I think we should be at the end of the road because, like you said, price and time. Now there's something known as seasonality. Seasonally, typically, if markets peak out, September, October, they bottom out between Feb and March. So we are in that window. We are in the pretty window where typically we see bottoms. Most of the time, we've seen them in the second half of March, but this time I think it may be earlier simply because everything has happened earlier this year. For example, the top was in late September versus 2021 when it was in late October. So we're almost 1 month behind in terms of time. And that is why I think we should be closer to the end of this move. The expiry might really be a significant help in causing that because a lot of positions unwind. People give up on this. Like you said, the boredom makes people give up, and then that causes the reversal as people then pile back in. So that is what we really need to see. I think it's very close. It will most probably happen over the next couple of days post expiry.
Rohit, also talk to us about the financial space because for today, definitely on the back of the news flow, the Nifty Bank is holding up. But within the financials, a lot of these pockets from NBFCs, MFI players, and even large cap private bank names are perking up the trend. Any particular spot where you find that good move is still pending?
I think the NBFC space, especially the big ones that have been consistently growing earnings, that's where the valuation drill back has happened. Of course, it already happened in private banks earlier, like HDFC and Kotak. If you looked at a 10-year valuation chart, you would have seen they were at the lower end, which is where they got buying interest. And the same thing now you can even see in the NBFC space. And this definitely is a good trigger because while it's one thing to look at valuations and another to really get a trigger, because most of the funds, if you've been noticing, have been nibbling into this particular segment of the market because it was more undervalued relative to the mid cap. So that is where the money has been going, and a trigger helps in building that positivity. So if it can carry forward, which I think it will, the banking sector might be one of the leads that will help improve market sentiment. So that's how I see it. I don't think it's over. This is what you're seeing is just the first day reaction to news flow. But I think the momentum in financials will probably continue for several weeks.
Thank you so much for joining us on the show. On that note, we'll let you go. Thanks once again for sharing your market insights with us. But let's move on to...
If you like this video, then like, share and subscribe to ET Now.